Welcome back. We're continuing with the earnings analysis on Trading Hour today, and the next company in focus is Insecticides India. Rajesh Aggarwal, managing director of the company, is joining in, and the performance was pretty good. We'll pull up the numbers for you. If you're looking at the Q4 performance, revenues up 7%, EBITDA of 29 crores versus a loss in the same period last year, and again a PAT of 22% versus a loss last year. So the street really liked that. FY21 full year numbers, let's pull them up as well. Revenue up about 4%. EBITDA was still slightly flattish, slightly negative. Margins also a shade lower on a year-on-year basis, and a profit growth of around 8.6%. That's the full year report card. So let's find out what lies ahead as we're looking at FY22. The management is with us. Thank you for joining in, sir. So first things first, can you give us a breakup into your various segments? How has institutional done, and what's the trajectory as you look forward to this year?
This was a difficult year actually. The impact of COVID was fairly visible across. So there were a lot of problems which we had to face in this year, and this year we didn't have any growth targets actually. We want to just stabilize and move ahead according to the market situation, and we did the same. So whatever growth which came in last year was through the institutional sales, and even in the last quarter and the complete year, the institutional sales have given us a boost. So looking forward, always the key growth is going to come by the brand, because brand contributes about 70% and institutional business has given the share of about 26% in the previous years, and export were just at 4%. But this year I believe that export will show a good jump. The domestic business will also grow, and the institutional business will also grow. Various reasons, because we are investing a lot on integration actually, both forward integration and backward integration. I mean to say that there is a lot of expansion on cards. We have invested about 50 crores in the previous years, and in this current year also we have a budget of about 50 odd crores, and we wish to complete this expansion by Diwali preferably, or latest during this calendar year we'll complete all the expansions, and we see a lot of new products to be launched soon actually. So as we back these registrations, these products will come. They will also support us in growth.
Okay, so that's a lot going on, Mr. Aggarwal. As you said, you are doing forward and backward integration. You're looking at the export markets. You're looking at new products, more on the branded segment. First of all, how much money are you looking to spend this year on all of these activities and on the CapEx plan specifically? And with all these activities that you mentioned, looking at exports, looking at more branded launches, how should the margin profile improve for the company?
Okay. The budget for the expansion is about 50 to 60 crores, which is the pendency of the previous year. We had budgeted about 1.1 billion in totality, and about 50 crores is gone into the previous year, and balance has to go in this year, plus minus. And we should be finishing the entire expansions by December of this year, actually within this calendar year, and they will help us in growing further. Yes, there are a lot of products we will be launching various AIs, because we are doing the backward integration and also launching a lot of brands actually. So these will help the company. So for the top line growth, we are keeping the double digit target somewhere around 10-12%, because again the COVID impact is visible in this year, but we should make a progress from the first quarter itself of this year, because monsoons are good and apparently things look very, very positive, and these 2 months have been pretty good for the company actually, and I expect that the June should also be helpful. And on the margin side, yes, there should be improvement. If we grow by say about 10 to 12%, then the margins can grow from 20 to 25% in this fiscal.
Okay, so 10 to 12% revenue growth, EBITDA to improve by 20 to 25%. So that's the FY22 guidance. You said exports will also start growing. So in this top line guidance of yours of 10 to 12%, could you give us a breakup? How much would exports grow by? What is your expectation from the institutional side, the branded side?
The exports should double this year actually. Last year we could not grow our exports because a lot of orders were kept pending because of non-availability of containers. This year we are also finding the same problem, but our first quarter performance of the exports is going to surprise the street. That is only I can say. But we'll keep the target of doubling our exports this year. And the institutional sales also should show a growth of about 15%. And again, we see the growth from the brand business. So all the three businesses should show a positive growth this year. The percentage is broad percentage. The brand business should be around 70% again. And about 25% contribution can come from institutional business and 5 to 6% from exports.
Okay. Sir, can you tell us what is the current debt on your books? What is the plan to reduce it? Because you've outlined some expenditure plans. So if you could just throw some more color on the debt, as well as, do you plan to do any more buybacks? Something that you did recently?
Yeah, we have done a buyback. The target is to buy back for about 60 crores actually, out of which we have already spent 50 crores. And now since the price has crossed our target, so we cannot buy it at this current market price. But yes, we have completed 80% of our buyback. So there is no other plan to introduce a new buyback immediately. But yes, it can come anytime in future once we are through with these formalities. Regarding the debt, we are almost debt free now. And we are going to remain at this status for some time from here actually. And all these expansions will be funded from the internal accruals.
Okay. All right, Mr. Aggarwal, thank you for joining in. Good luck with all of those plans, and we look forward to our next conversation. That's Insecticides India. We do need to take a very quick break. On that note, we'll come back with more on the markets.